Hello, my name is Irina Ryshkova, your nonprofit auditor. I have a small CPA firm in downtown Oakland, and we provide assurance and tax services for nonprofit organizations. This is our NAP number 4. NAP stands for Nonprofit Auditor Points. NAPs are designed to cover complex and common accounting and auditing topics for nonprofits. Before we begin, I would like to have a disclaimer. It is not authoritative video. In this video, I am sharing my professional knowledge and experience, and these videos are designed to help nonprofit organizations. Given the complexity of the accounting standards and nuances of nonprofit financial reporting, it is important for your organization to consult with qualified accountant or financial advisor to address any specific issues. To remind, all these videos are based on GAAP, Generally Accepted Accounting Principles in the United States. Let's continue. Our topic of in-kind. In NAP number 3, we discussed 2 types of in-kind donations: in-kind goods and in-kind services. In NAP number 4, we will be discussing in-kind rent. In-kind rent can be quite material and substantial in nonprofits, and it's very common for nonprofit organization to obtain either free rent or below fair market value rent. In both cases, nonprofits has to recognize in-kind revenue. In-kind revenue can come in various situations for nonprofits. Nonprofit can be given in-kind free rent facility for their office, or it can be much more temporarily for use for specific event, maybe for special event, or for some periods of time, maybe for a week, or it could be for a day, could be for a year, could be for multiple years. In-kind rent should be measured at fair market value. What does it mean? The fair market value space is determined by comparing similar rental properties in the same location and condition. If no such similar property is available, then appraisal probably needed. Donated rent can come from a donor with restrictions or condition. As we discussed in the previous NAPs, any conditional rent or any conditional contribution until the condition is met is not recognized as revenue at all, because it's not a promise. But if rent comes as a restricted for specific use, for example, donor can say this facility can be only used for one specific program, then it's restricted use and this donation would be restricted. Therefore, if in-kind rent is given to nonprofit organization, nonprofit has to recognize in-kind donation and in-kind expense if that rent was used in the same year. Again, it will be netted, but on the GAAP, we are required to present as a gross method, not net. We should present revenue and expenses separately. Sometimes nonprofits receive rent not free but below fair market value. Very often, nonprofits are able to negotiate a special rent with a landlord specifically for nonprofits. What it means from accounting standpoint, that nonprofit does receive partially their rent is free. That portion is between fair market value of rent that would be charged to any company versus the amount that was charged to a nonprofit should be recognized as in-kind rent. On financial statements, as I indicated before, presentation of in-kind would be rent revenue and in-kind rent revenue and in-kind rent expense. However, revenue recognition for rent becomes much more complex if nonprofit receives free or below fair market value rent for multiple years. Under general accepted accounting principles, the full amount of donated rent for multiple years should be recognized as revenue in a year when it was donated. Let me repeat that, which is very important. In-kind rent that is unconditionally promised for multiple years should be recognized in full amount in year one. Let me give you an example. If a donor gives a free use of facility for 5 years that costs $20,000 a year, therefore total cost is $100,000. The full amount of $100,000 needs to be recorded as in-kind donation. And let's assume in year one, nonprofit used $20,000 first year out of 5, this facility. Therefore, $100,000 would be revenue, $20,000 would be in-kind rent, and $80,000 is remaining amount for the next 4 years would be recorded as a right of use of facility on the balance sheet as an asset. In a net assets section, restricted donation would be $100,000, $20,000 was released, remaining balance would be $80,000 of restricted net assets, restricted future rent, restricted by time. Sometimes nonprofit can receive multiple year rent that will also include provision about CAM, common area maintenance expenses. So the donor will say, we will give you 5-year free rent of facility, and we will also cover CAM, common area maintenance. Revenue recognition rule for common area maintenance is different from revenue recognition for in-kind rent. Rent is recognized, as we mentioned just now, for the full 5 years. However, CAM is only recognized in a year when the services were used, because the GAAP, general accepted accounting principle, using the standards for in-kind services for revenue recognition for CAM. Therefore, if in year one, nonprofit used $3,000 worth of electricity and other common area maintenance services, then it would be recognized each year as soon as the services are used by a nonprofit. To summarize, for in-kind rents that are either provided free or below fair market value to nonprofits, nonprofits have to recognize revenue and related either asset or expense in a year when the in-kind rents were unconditionally promised. Common area maintenance expenses only recognized in a year when they were used, regardless if they were promised for multiple years. And that concludes NAP number 4. Thank you so much, and I will see you soon.